All right, I'm on vacation. I'm not in my usual studio. This is the Stocks with Josh show. The last video I did, we covered some top trades like Tesla, and I predicted that we were going to be going higher, which we blasted off yesterday. I'm going to briefly talk about Tesla, Sound, Baba, and Apple, but the main purpose of this video is to talk about a stock that I alluded to yesterday that was the next one that I'm really beginning to pay some attention to, and I want you guys to put it on your watch list. It's in the solar sector. The reason why I started paying attention to it is yesterday, that sector began to pop up a little bit, and that may be a signal that it's getting close to a reversal. Solar's been getting absolutely hammered for the last 12 months, and in particular, enph has come way off of its highs. When it hit its highs in the past, people were asking me about it when it was way up there at 300, and each time it came across a very well-defined line of resistance, I told people, take profits and sell. Take profits and sell. And ever since then, it's come down an incredible over 60%, and now we're sitting down on our lows. And the big question that we've got is, are we going to be going lower from here, or could this be signaling the reversal? I'm going to get into the technicals on that. Guys, thank you for hitting the like already. If you are new to this page, hit the subscribe, because on this page, I give daily insights into stock and crypto. I make predictions, do analysis, and I share my personal trades with you guys. Hit that subscribe button and that YouTube all notification bell to get on board with those trades. Okay, I want to quickly start off with overall market direction. If we look at the heat map of the S&P 500, yesterday it was a beautiful green, very strong day. Yesterday Tesla was rocketing higher all the way to the top of its range. Today we have a mixed day. The only outlier that we have at the moment is Apple, which is showing a little bit of strength. But I want to point out something very important to you guys about Apple stock. It really is at the top of its current range. My target on Apple yesterday was $188 to the $193 range, and in my mind, we're right up to it. And so we might be getting very near the end of this push up on Apple, and we might need to go back and test the middle of the range. But I want to point something out very critical for you guys, because we want to go back in time and we want to look at how the candlesticks looked the last time it hit its all-time high. Now, back in 2021, it hit its all-time high. Now, if we look at the monthly candlestick charts and we compare them to the high that Apple just made, because Apple just made a new all-time high, and it's forming its first monthly candlestick chart after that new all-time high, and I want you guys to see the similarities, because when you go back in time and you go to the current moment that we're in, these very much look like distribution candles. Now, in my video this last week, and even though I'm on vacation, I'm really trying to give you guys, I'm not giving you guys no fluff. I'm pointing out extremely critical market dynamics to you guys in the moment so that you guys can get prepared right now and for the next couple months. And what the Apple chart tells me, and I've told you guys in past videos that Apple works like an indicator all on its own, because it's the world's largest market cap stock, it's the world's largest company, and it's an indicator. The smart money loves it. And so how the smart money trades it, invests in it, or takes profit in it tells me a lot about how the overall market's doing. And what I see the Apple stock chart doing on the monthly candlestick time frame is it looks like it's going into distribution. And here's what you need to know about distribution if you don't understand distribution. Distribution is typically a high price range, high volume environment where there is the selling and taking profits on a larger run-up. You got to remember, we were just a year ago down at $125, then we came all the way up to $200. And so through distribution, you're going to see some institutional profit taking, and then eventually it's going to bring the price to what comes after distribution is selling or decline. And so we very likely have a moment of selling and decline ahead of us. Guys, I'm in a hallway at the Animal Kingdom Hotel in Disney, and so people are going to walk by. There's going to be vacuuming cleaning noises, but I'm going to try to push this video out because I really believe it's going to help you guys have a good perspective on what's going on in the markets, and I want to bring some new technicals to you on some important stocks. So on Apple stock, like I said, I think that we're very close to a place where we're going to see it hit and then probably reverse. For me, the top of this range is 188, 193, and that's where I think you're going to be looking to possibly take profit. Now, if we go over to the heat map of crypto, we see, as it was yesterday, a very green day. Today is a gray and a flat day. Now, here's my prediction for Bitcoin and the miners. This is going to be brief, but powerful and important. I think that Bitcoin may go up to 28,500, but we're range bound right now. And I think it's very likely that we're going to see rejection at 28,500. It could flash as high as 29,000, but I'm just going to stick to the technical range of 28,500. Now, since we're not there yet, as it continues to move up, I believe it can lift the miners. But I don't believe that right now, even though we've had a nice and beautiful pop on the miners, and I think we've got a little bit more room to the upside, I don't believe that this is the buy and hold moment. I don't believe this is where we're going to hit new highs with the miners. I think Bitcoin is still somewhat in a sideways trend, and I think it's going to become a stronger buy this November. And that's also where I think the miners are going to be a stronger buy right after Thanksgiving this year. I think it's going to be a stronger buy. But let me just give you guys some local technicals for Mara and Hut. And you say, Josh, why did you pick those two? I happen to be in those two, so that's why I'm sharing the technicals on those two. I'll try to share some technicals on the other miners. But here's what we're looking for. Resistance right now for Mara is at $14. That's an area where it's going to struggle to get over. Now, if it did get over $14, you could expect it to move all the way up to $16. And let me define what it means to get over a price. I'm looking at the daily candlestick chart, and it means that it will close on the daily above $14. It'd be $14.10, $14.20. It doesn't matter as long as it closes above $14. That puts it in the $14 to $16 bracket. But if we don't get over 14, then this could be, we could just be buffing, hitting up against it, right, and coming back beneath it. And so that's going to be a signal to us whether or not we can get to 16 right now, whether we get over 14. And then on Hut, we're looking for it to close above $2.75, and that would give us a little bit more room up to the $3 range. But right now, $2.75 is also acting as resistance on Hut. Okay, let me get quickly into Tesla. I wanted you guys to see a chart today with your own eyes. I'm going to give you guys the Gaussian channel, the daily candlestick version of the Gaussian channel, and I simply wanted to show you it this way with this indicator so you could see that there is a little bit more room to the upside. I also want you guys to see the MACD. Now we are below the zero histogram line, and we have curved up. And if I'm looking at the MACD, which is a momentum indicator, it shows me that there's still momentum to the upside, that I see potential in Tesla. But I'm going to give you guys what I did with my Tesla trade, and it may or may not surprise you. If you've been on this channel for quite a while, you might have been able to predict that when it hit 260 that I would sell. The last time we came up to 260, I took profit. I know that 260 is a heavy area of resistance, and so I just had a feeling that it would hit that 260 and that it would give me some pullback. And when I tell you guys that I sell, I'm just getting in and out of these positions on the daily. So here's what I want you guys to see right now in the Tesla chart. We are slightly above support at 256. So we're sitting on a support range of 256. And you guys need to be aware, 256 is now the new line in the sand that needs to hold. If we lose 256, we will go back to 245. But it's a really tight price range because resistance is right above us at 258. So we're in a very, very tight area of price compression. We're above a support but beneath a resistance. And so we're going to break one way or the other very, very soon. I do want to point out the trade volume because it sold off today, but it sold off on decreasing volume, which meant that there wasn't a lot of momentum to the selling position. And similar to some of the other stock charts that I looked at this morning, I think that that MACD and that Gaussian channel indicates that this stock still can pop up from here. So I sold at 260, but just to be clear, I sold at 260 but my plan is to get back in before the market closes today for another push up. Now I'm raising my target because we got to 260. My previous target was 261. I'm now raising my new price target to 271, but that's only if we get a close above 258. Okay, brief commentary on SoundHound. SoundHound's doing really good. I like the chart. We still see that same price consolidation, and I think that we're going to get a flash up to around that 278 to $3.15. But here's what I think could happen. It could happen after market close. It could happen pre-market. So if we get a start of the morning at like $3.15 or $3 and it begins to drift off, that might be it. So just be aware of how that might end up playing out. We're going to hit a wall, and I really think we're going to pull back some more. Okay, I'm going to get into Alibaba, and I'm going to get into enph here in just a minute. Let me take a quick station break for the moomoo investment app. It's a zero cost to trade platform, and if you open and fund an account, right now they're going to start you off with up to 16 free stock just to get you into a liquid position. They're giving you free stock as well as up to a $50 cash bonus. Now, I put a link in the top pinned comment of this video as well as in the description of this video. It's available in the US, Australia, and there is pre-registration in Canada, which means that you can open up an account, you can get access to all of their tools, but you can't deposit money or begin to trade. We're just in pre-registration in Canada. But if you're in the US or if you're in Australia, you can open and fund an account. Click on the link to get the exclusive and limited time offer that they're offering your country for that free stock and that free cash. But I use the app because I love their tools. In my view, they've got better trade tools than any other retail trading platform. They got a free stock screener, free level 2 data, 8 conditional order types, and the best retail earnings calendar, which gives you a great overview of the earnings data after it posts and tells you which company is going to post next. Best part of moomoo, though, is I host a chat group on the app called Stock Josh Fam. There's very few positions left open in it. If you guys want to join that, you better get over there soon because it's only going to allow me 6,000 members, and we're knocking right on the door of 6,000 members over there on the moomoo app. I also briefly want to share with you guys that the last live event that I did, I announced a new Patreon, a Discord with the Stock Squad. The Stock Squad is made up of 4 guys. Myself, a technical trader, Stock Up with Larry Jones, a momentum trader, Keenan Grace, guy who's doing great with options, and Stockmo, who's got a world of knowledge for the stock market. All 4 of us combined into one Discord. There is also a link for that in the top pinned comment, and there's a link for that in the description of this video. Now, we are going to be posting a portfolio where each of us is going to pick 5 stocks, and it's going to be a little bit of a competition between the 4 of us. I think this is going to be a great portfolio, and we're going to be posting that in the Discord here in the next couple weeks. So I want you guys to get in there and get familiar with the community and get ready to get that portfolio. It's going to be a great portfolio, and we're going to be sharing that very, very soon. Okay, I briefly want to talk about Alibaba. Now, when I previously talked about it, I said that the $88 to $89 price range was super critical for it to hold. That if we lost that range, then it could be going back and testing the lows. But we didn't lose that range. It held up very, very well, and in recent days, it's shot up into the 90s, which I was super thrilled to see. But I want to give you guys some technicals so you're aware of what to expect next. Resistance for Alibaba is at $96, and that's what we need to see it close above for it to get back to $103. Now, I think that if we get a close above 96, it's going to push up to 103. But here's where we need to keep our eyes wide open. 103 has worked twice before in recent days as a strong area of rejection for Alibaba. It's had a hard time getting above 103. And so I think that we're likely to get to 103 again, but we need to this time see that we close above 103. If we close above 103, then 120 becomes a very strong possibility. But if we fail at 103, then we're going to come back and retest the local low again. All right, let's get into the enph story. Now, this is an interesting story with very mixed bullish, bearish sentiments that I have. I've got bullish and bearish sentiments on enph because the success of this company is 100%, like a lot of companies, tied to the Fed's interest rate hikes. But in particular, solar is expensive. And when interest rates had been held down at a low level for such a long time, it enabled or gave access to a lot of people and a lot of companies. It gave them access to solar. But as the interest rate climbs, solar becomes even more expensive, and for some, it gets further out of reach. It's one of the reasons why enphase has been beat down so bad. But let's just go over the history a little bit. Enphase was a very strong company for the last 10 years. In particular, it was in 2018 when they went from $316 million to $2.6 billion. That was essentially their local heyday, and that's when we got our newest high. During that time frame, they had a 50% year-over-year growth, which was incredible. They also went from a 0% operating profit margin to a 21% operating profit margin. But since then, it's fallen 65%. It's lost $218 per share. In particular, the last 6 months has been an absolute slaughter. And one of the reasons why it has fallen so badly is because their CEO has recently been giving pessimistic guidance in their recent earnings statements. In their last earnings overview, the term interest rates was mentioned 13 times, which was clearly a warning to the shareholders. And the CEO said that demand will unleash only when interest rates are back to normal. Well, here's the problem with that. Because what he's defining as back to normal is a 0% interest rate environment, which a lot of people do not believe that we will get back to anytime soon, because a 0% interest rate environment for such a long period of time wasn't normal. That where we're at right now is probably normal, and we have the potential that the interest rates could become much more sticky in the coming 6 months to a year to the next 3 years, that we could be higher than where we're at right now in the course of time. And so the idea that the profit margins will only get back there when interest rates get back to normal may be overly optimistic by far. But let's take a minute and look at the bullish side of the coin, because you guys might be saying, Josh, you seemed so optimistic yesterday. I'm optimistic about beginning to watch this stock because it's beat down and it's a good company. They're a good company, and I think there's an opportunity for them to go higher. And not only do I think that this stock price has begun to be attractive at this level, but the CEO does as well, because just in the last quarter, he purchased $1 million worth of his own stock, which is always an incredibly good sign that the stock might be at a fair price, because he is the closest to it. And if he wants to get in at this price, it might be worth us putting it on our watch list as well. Now this morning, enphase has pulled back just 1%, but what's of interest to me is that it has 50% lower volume, which means that there is low interest in selling at this level. That's a strong technical that you guys know I like to keep my eyes on. And here's the price points that you guys need to be watching. $124 is the critical line in the sand. As long as we stay above 124, there's a strong possibility that we're going to build some upward momentum. It's very, very likely that we could from here go back and at least hit 140, and above that we could make our way back to 184 and then eventually back to $230. So there is a potential 85% up target right now on enphase energy. But here's the warning. This is on the watch list, and we need to begin to see that reversal before we get in or load up, or before you buy call options. Not unless you're buying them like a year out. You need time on this stock because direction has not been confirmed. If for some reason enphase closes below $120, I guarantee you this thing is going to go all the way down and hit $100. And so there is plenty of room to the downside in the charts still. I would tell you guys, though, that if we hit 100, I would absolutely be a load up buyer at that point, because I think that would really be the most beat down that we could potentially see this stock. And so I will be sounding the alarms and letting you guys know when I buy if we were to get that type of capitulation moment. And guys, you know that stocks can get beat down for a long time, but still go into a final capitulation moment and touch a really low level on the charts before Wall Street gets excited and says, no, it's time to buy, and they load it back up. You get that V-shaped recovery, and then we can build price from there. That's very possible. Right now, this is one for you guys to put on your watch list. So my final thoughts for you guys today on enphase is that 1, it's interest rate dependent. 2, investors look 6 months out or further. The question right now that we have to ask ourselves, knowing that it's interest rate dependent, are we 6 months away from a potential interest rate decrease? And if we are, then enphase may be at a great price right now. In particular, what I'm going to be watching that I think is very likely is for it to come up and back test 140. If it doesn't close above that, but it gets rejected at that level, then we could come back and make a potential double bottom around $124. Those are the things that I'm watching in the charts. All right, that's it for me today. As always, thank you again. Hit that like. If you guys want to get the follow-up videos and you want to get those signals from when I'm getting in or out of these plays, you've got to hit that subscribe and that YouTube all notification bell. Hope you guys are having a great day and making some money. I'm going to go and I'm heading right after I get this video launched. I'm going to head over to Animal Kingdom, join my family, and hopefully ride Flight of the Avatar and some other cool rides. Hope you guys are having a great day. As always, peace and blessings. Take care. See you in the next video.